Greetings, market rebels. Welcome to this week's sector situation. I'm Wayne. My partner Ryan, I think, has gotten our market outlook overview uploaded for the week. I just completed the macro measure video a few moments ago, and that's probably rendering. So those will be coming out. Everything will be coming out in a little while. Anyway, so it's Sunday, June 4th, 2023, a little bit after 1 o'clock. Let's get going on the disclaimers. I think we're going to have a merciful sector situation here this week, which is good. Macro measure, once again, so much happening. An intellectual property rights notice here. So much happening that, it just takes a while, honestly. And that's with leaving, I think, a lot of things we could mention really out of the picture. This is a snapshot, though. If you'd like to get that, take a screen capture, whatnot. That's what I talked about in the macro measure, and some of that might kind of filter its way into this discussion. So on that, I'm going to stop the share, reposition things, and then we'll be able to move into the sector situation charts. And let's go directly into the Qs first. So just bear with me as I get us set up. So looking at the Qs, I think this is the place to start because these have really been the leader. And I think anyone that hasn't been on vacation or whatnot, pulled away, knows that. And so we talked about things like this mainly in SPY, but incoming trend was up, consolidation. Expectation is that breakout to the upside. And then when you start to see that you don't get that full pullback to the lower end of the channel or rectangle, whatever you want to call it, then that's your kind of first hint something could be brewing. And it was brewing and took a little while to really get its mojo. But once it did, right, they've gone haywire. And of course, this to me is all about using the catalysts to pull this off. That's what they've been doing. And then, of course, some of the internal plumbing, as we call it, starts to play in where, oops, I got the wrong there. I wanted to get rid of this price percentage. Some of the things we talked about, like you get the FOMO for putting it one way, right? The poor sentiment's been working against bears, working in favor of bulls. There's gamma squeezes, buybacks, the 75% beat, bogus beats every quarter. All the stuff we talk about in macro measure consistently, as we roll through each quarter. There's mechanical buying, there's squeeze targeting, there's panic happening. And what we should show here, probably just one tab, is this one. And so last week was extraordinary. If this research is accurate, and I have to assume that it is, you could see that tech inflow was by far, the largest amount of inflow in terms of funds flowing into a market or a part of the market ever, right? So it's a record, and it's not even close. This is like, I guess, the post-COVID response madness that got put together right there, and that dwarfed everything prior, but this dwarfs that. So that gives you an idea of what happened and how we've gotten here. So I don't know if this is folks that were short covering and then capitulating, covering and then going long, I should say, or just people just going long. A combination of everything is more than likely. But anyway, you get the idea that a lot of money came into that tech area. And interestingly enough, right, that was the area, parts of the tech area what we thought were overdone already. They were on extremely high RSI readings. And this, I think, is in the short term, what I call the short term overbought. We noted that. We said if they gapped it up, you should sell. That was our short form version of it. I can't tell anyone what to do, but what my argument was, right, if they pull this off, because there was some more follow through, first order business is not to necessarily get out, but just capture your profits is a better way to put it. I think that's what I said as well. Just capture your profits, because you can always get back in, right? Capture your profits, let it breathe, see what you want to do, right? And if they don't if they sell it off the whole day, then fine, right? Let them sell it off. You're happy because you were decisive and you did what was the most important first, which is capture your profits. So what I mean by that is I wouldn't get caught up in trying to get an instant rolled on or working, one sale against one buy in terms of a spread to modify your position. No, just take the money. If you were riding stuff, there was a lot of extra money to be made there after that run we had in SMH. Take the money, first and foremost, capture that, get out, pay the extra commissions or whatever you want to call it, ticket charge. Doesn't really matter in the grand scheme. What really matters is that you were decisive on the opening or near the opening and you got out and took that money, but took those profits. But that's interesting, right? That the big area that's really been the leader in tech didn't really absorb apparently a lot of those funds, or maybe they did and just didn't perform. So maybe there were just as many sellers waiting. But that I found that to be interesting. Of course, what did go, we had Apple as one of our names of the week, and I guess it was a good week. I'm often early in Apple. Ryan and I tend to be early on a lot of our names, just where you're just a week early, and then the next week you really get strong performance, which is why I tell folks to keep an eye on a lot of our names for the following week if the market stays in that mode. Because a lot of times you can get even more follow through. But this did perform, right? Opened here. By the time the week was over, it had done fairly well. Can't complain. There could have been a complete dud, but other things, of course, were bigger movers. We had Tesla maybe ruled out, even though we like Tesla because we favored other things. But what we did note, I think in macro measure and sector situation last week, was that we felt like the rally really kind of had to broaden out. And that's really what I was getting to, which is that it did, right? If we go back and say, like, these things, a lot of these things didn't look good. I personally still don't like the way a lot of this looks. I think this was more or less FOMO, covering plus FOMO, whatever you want to call it. But this to me is not the way that you really start out a long-term sustained bull market with this sort of panic inflows that we saw. So if I'm bull, I'm hoping that there's a little bit of a pullback here, put in a higher low, and then work your way up and through, take this out and then go, rather than try to go up and away all at once. But you can see, right, the reason why this won't be a very long video is that they came in for virtually everything. Every single thing was green, really, on Friday, and I think almost all of them, if not all, were green on Thursday. So this became a risk-on situation, and even utilities, which were floundering even on Thursday, they reversed those strongly on Friday, which, right, you would think that's this is kind of like an overlooked sector. It can be important in some ways because of the interest rate sensitivity and how defensively people are positioning themselves or not. But I think there's really there's a lot of complacency, which I talked about at this point, maybe not using that word, but that was in macro measure. Of course, I think that with put call where it is, with the VIX where it is, and let's talk about the VIX with a better chart of the VIX. That we talked about this early in the week, how we could get a scenario by the end of the week where the VIX really got smoked, and it did. And I think that's because we're approaching the summer. The Fed is still, I guess, 2 weeks away, and they pushed things really further in so many spaces, and it's crushed this. So you're looking at something that's not quite, but probably about, got to go back about 22 months or so, roughly 23, whatever you want to say, to find this level is this low in the VIX. So between put call being really low, other things, which I talked about in macro measure, where we're super stretched. A lot of these big names are really historically super stretched on some measures. I'm really moving us to DEFCON 4, off of like, okay, it's a bull market activity, price action in some stocks at least. Let's go with the flow like we always do. I would still do that, of course, but I think you have to now be starting to really think more about the risk side of things due to the stretch. Now, to be fair, right, and not sound like I'm perma bearish, even though I still am bearish overall on when I think about the economic situation that's unfolding and how the market continues to, I think, not really pay much attention to that. It might be this one we got to get back to. The truth is, though, they did move a lot of things up, as we noted, and that's certainly better than going down. So things are looking a little bit better clearly across the board. A lot of things that were on the verge of really cracking potentially that we looked at the past couple of weeks, they're not there anymore, right? They moved those away. So even though I'm moving up the DEFCON, I would still say that, you've got to fall through the recent lows before you can really think something awful's brewing. So we're just trying to get ahead of the game with the DEFCON move, saying, hey, this has gotten extreme in some areas. So you've got to respect the fact that it's that extreme, and that once this Apple development maybe runs its course, maybe the Fed runs its course, maybe the Fed changes things. I don't know. Maybe the market will get surprised by the fact that the Fed doesn't pause the way the market's now expecting. We all have to wait and see on that. But they did improve things. Just to give you an idea, though, like that you could see the daily RSI readings. So these are daily charts, and you can see that the areas we've consistently talked about as being the leaders, they still managed to eke out okay to solid performance, but they're now overbought on the daily, right? And now they're coming for other things. And this move in the transports, this was utter madness. This move over here in industrials for 2 days was utter madness, right? And then this may be the real kicker is the XLB. Luckily, we caught some of that stuff in some UOA names, so I'll take it, right? I'm happy about that. And I'm happy that things are actually getting better, and hope to be wrong about my macro concerns on the economic side. But even though they're still there, I've always really hoped to be wrong about them. But anyway, I just don't think these are sustainable. So the good news is we're away from the lows. We have to fall through those lows to have really bad stuff happen. So there's some buffer between now and more dangerous times, a little bit. And things did look better. They did fan out, but all these sectors now are I think too far too fast. So just to kind of come back over to, I'll come back over to XLK, and for some reason, I guess I better move to I'm gonna have to move to a different chart here. So just bear with me. So for some reason, it's not ready to reflect what I want here. So let me do this. Let me do this. Let me do this. So XLK right now, that is on a 4-hour chart. It's at 75, right? So this is where I think we talked about this, but I think they're going to have to fan out, right? XLC is at 70 on the 4-hour already, right? So that just gives you an idea how much they moved, even those strong sectors, that you would think, well, how was that how did you get there that fast? Right now, the RSI on the XLE on the hourly is 65. So there's a really big move there. Not awful, but that's a really sharp move that had. There's a really sharp move in XLF. That's at 70 rounded off on the hourly already. So there's room on the daily, clearly, right? Because you're not anywhere near overbought on the daily. But in the short run, this is why you got to be careful, even in these sectors, to start the week. So the summary really is things look better. There's room to run. There might even be the Apple catalyst. And remember, Apple being the largest weight, and with this possible worldwide developers conference that's going on and maybe other news, Apple could run. I mean, if it does run, and again, I would have been a week early last week, but with the RPP name of the week, but still keep an eye on it, because if they decide to run and gun, right, I think this thing has a shot at trading up to about 190, depending on if that happens, how fast that happens. But that's, to me, a completely realistic target if they go with the bull scenario this week and use Apple as the largest weight to take profits other places and not really impact the indices and kind of keep that good bullish vibe going that they all know and love. The other things are, let's take a look at the fact that we've been saying, well, these commodities don't look all that wonderful. If there's this big economic great story that awaits us, how come they're not doing much? And we're still in limbo here. But you can see that they came after oil, closed out the week, right? So that did look a little better. Didn't look very good right there on Wednesday, right? But it did look better by the end of the week. Copper also similar, where they came for it at the end of the week. Wow, Thinkorswim's really getting bogged down here. They came for it, kind of dawdled around early in the week, but then they really kind of jammed it to the 200 there. And then in terms of, we have to abandon lumber, so we've been using the ETFs there, cut and wood, and that they came for that to end the week, right? You could see that as well. That got jammed up. So they pretty much was just a risk on jam. Some big money came in. Like I said, maybe flip their positions around. Could be CTAs. It's probably a combination, as usual, of everything. Just a little bit of everything or a lot of everything that caused such a dramatic move. And, you know, the sleeper scenario in SPY I talked about in macro measure. So it is what it is. But those are all looking better. So the commodities that we check out are looking better. XAU, we'll take just a look at that sector while we're talking about things related to commodities. And that, you know, that did have a nice little move off that low. Still challenged because of the downsloping short-term SMAs. The price action still, you know, lower high, lower low overall. We'll see what happens there. You know, it had its time to shine, and it's been kind of correcting, you know, as you can see, for the last month and a half to 2 months. But, you know, there's a little bit happening there. I think that's still mixed, kind of mixed and messy there. Not something I think that looks super clear, or at the moment, anything can happen. You know, that's obviously one that can react to geopol. But related to the wood ETFs, lumber ETFs, you know, they came in for XHB at a big way as well. So now that is going back towards the recent high. So somehow home building continues to hang on. To me, I'm sticking with my take on that, which is a very simple take. Fine, let's trade what's in front of us. But to me, there's like a ticking bomb here. I just have a very hard time knowing how debt dependent everything is in this country at this point, how inflated home prices are, how rates have made affordability so much more difficult to come by. Have a really hard time believing this is easily sustained, but I'm always open to being wrong, and I'm actually hopeful about being wrong. So there you go on that. But I mean, you can't ignore the fact that this wasn't looking good, like a lot of things. And we even talked about other things that are related last week. IYR not looking good, but they rescued that. They rescued home building. Some of the bonds, bond ETFs, the corporate bond ETF, the LQD, this thing, which was finished the prior week, kind of looking a little concerning, closer to lows. They put it together. So basically, right, it's real. Other than like the VIX, it's really hard to say that HYG we can look at. We sometimes look at this as well. So other than that, it's really hard to say what they didn't come after. So that's why this is all a risk on thing. I think you have to look for XLK, XLC to be a little bit maybe mined. They overmine those in the short run. And maybe they start to go, as we said, fan out. And KRE, something I have a bearish position on, that's low risk bear for now, which is fine. That's why I'm fine with this, what's happening here. I'm gonna let this go a little bit longer before I make any adjustments. But they had a big move up there on Thursday and Friday. So they came for everything. So what can we really say about that, right? I mean, it is what it is. They came for all of it. Every sector went up. And now, right, the problem I have that is really the main focus, I think, of this week of sector situation is that a lot of this stuff just became overdone too quickly, right? They jammed this stuff up too quickly. So let's pick out a few more short-term chart overbought readings just to share, just to give you an idea. So you're at 73 on the hourly in the transports. XLI, you're at 75 on the hourly. XLB, you're at 75 on the hourly. So there's this, the moral of this week's story in these sectors is, just like we said in the write-ups during the week, the webinars, and even last week's videos, things sort of played out the way that we were discussing, where to get this thing really going further, they had to bring other things along. But as usual, right, a lot of it got overdone in the short run. So look at that discretionary jam. I didn't even check that one in XLY. I knew it happened, but we didn't check. We could check it real quick on the hourly. Well, we'll see what pops up here. 70. So they left, this is what I'm getting at. So they left things really kind of in this overbought state to close out another week. The Apple developers thing, I guess that some people are counting on that to ignite even further upside fun, which I don't know exactly what's going to be debuted and how impressed people will be with what comes out. So I don't want to, and I'm not an Apple expert on top of it, but that sure could try to offset a lot of maybe profit taking other places if they can keep Apple buoyed or moving it, buoyed at the least, or moving it up. So that's a possibility that we have to look out for. But that could let a lot of the indices hang in there if there's a bullish scenario in Apple, despite maybe profit taking in other big names that had a great run, or semis, which had an incredible, probably historic run. And if that's the case, they could perform like stealth rotation, not really hurt the indices, and continue to, maybe after a little brief pause early on Monday, maybe into Tuesday, they could end up where they come after more and more, because more and more people become convinced. So keep an eye on your sectors, right? If they're all jamming, which makes it hard to really pick one out. I would just say that even XLC and XLK, the tech and communications, if they want to keep running it, there's nothing wrong with trading it. Just know that a lot of the stuff's overbought. If you're a bull, find yourself as a bull early in the week, be extra careful because of the short-term overbought nature, right? Now, there are times when markets really completely discard overbought readings. There are, and that's when you really get into these euphoric phases, these melt-ups, and that's what the sleeper scenario that we've talked about for most of this year on and off is all about. Just going to cover it quickly, even though this is sector situation, in case folks don't watch Macro Measure. But that's basically, I've been waiting, just from my own personal observances over the years, I've been waiting for them to possibly take out this high here when the SPYs rounded off to 432. And then I think there could be a percent or two of short squeezing that goes on. So that would be like 3% more that we'd see in this market, which was about 13 points, which puts you up somewhere near 440, 441. If you go to the extreme in my kind of gut instinct call, which again is, I wouldn't have it up if there wasn't some validity to it in my mind, at least. But I don't know. I mean, it's not really that it's anything where I can say I've got empirical data here. Let me show you, this is how awesome this is. But I've just seen this time and time again in stocks and in the index ETFs. And when they do this, it really forces a lot of capitulation. And then you're finally able to see the rug pull. So another way to put it is, everybody that's been bearish really starts feeling the pressure when we get past here. A lot of people finally throw in the towel and say, wow, that's another higher high that's been taken. I've been made another higher high, and there's another high taken out in the decline of the markets last year. They really are flipping this thing around to a bull market. And of course, that would draw a lot of people in, force a lot of people out. That's why I'm saying there could be a burst beyond that level. Just a gut instinct call. And if they do that and get things if that happens this week into next week, I would assume we're going to see some really short-term overbought readings, stuff that's rare. You'll see rare RSI readings in a lot of different ways. If you do see that, that sets things up for a rug pull. Maybe the Fed does not follow through on holding rates steady, which is now what the markets are favoring significantly. Markets are now favoring that we don't go up at this next meeting this next week. So just keep your eye on that. So yeah, I think you can go into some sectors and you might start thinking about, if this thing stays the way that it is, start thinking about they're rotating, it's fanning out, try to find things that are, going to go. I think your financials are one of the things that they didn't gap nearly as much, but they are overbought, but they could be breaking out, at least attacking a high. They're not big movers. The XLF is not a big mover, but some names in there you could go with. Other things have maybe ran a little too far, too fast. They're probably a little more dangerous. So I would be careful about that. Energy is another one that they've all kind of done the same thing, just to different degrees. So I would be careful there. But still, you could maybe get some trades out of that. Just again, the big message, I think, is just be nimble, know where you are, know that you are entering stuff that's already short-term overbought. And it's relatively rare compared to how things normally transpire, that they would just be able to keep going and going and going after already having gotten here so fast. In sectors, in stocks, sure, but in sectors, in major index ETFs, usually when you get this overbought this quickly, there's at least a pause, if not a pullback, that's of some degree, right, before that things go again. So that's what I would be on the lookout for. Another one would be, right, this is kind of defensive versus XLY, which is, definitely a little more offensive. And I like to look at those for that reason. But they could bring this thing back up and through. I mean, you could see, maybe people say, oh, staples have gotten really beaten down. There's some value in there, and they come for some of those names. So just keep that in mind. I don't think anything, because of everything kind of going risk on, we don't have any massive standouts that I can really point to. I'd be willing to take the trades. For me, it'll be wherever the UOA shows up. If I see a theme developing, I like those themes. If you go and talk to Pete Najarian or listen to Pete, he'll talk about the themes and concentration and repeat EOA. And I'm on board with all of that, because I have seen and see the same things that Pete does, for many, many years. So that's what I'll be looking for, is where they go. But I think right now, don't rule these out, because they have been leaders. But the problem is these are still overbought, and the fan out might happen, in other sectors. And that would be good. I mean, let's be honest about it. Even if you are a macro bear like me, in terms of what's happening economically, domestically, and internationally, you have to trade this market that's in front of us, right? And you've got to say that, like, hey, they're now coming for other things. So even though I've been talking and still think the sleeper scenario could happen, my scenario could end up happening and there might not be the rug pull that follows it, right? It could just be, no, that they do push it through, they hold it, and they keep going. You have to always, have in the back of your mind that the way you're sort of gaming things out might not be right, and that's what keeps you disciplined and healthy with respect to your risk management. So I think we covered everything we normally covered. You have to admit that things are getting better. The one thing maybe I may have omitted, and I know some of our Rebel Pit friends like this, so let's make sure we cover XBI. We got a question about this in the cocktail hour on Friday. We had a time, because a lot of our guys had obligations for things like graduations and stuff like that, or were traveling. All kinds of different things cropped up. So sorry, it was just myself, Ryan, and I don't even know who else there was. Maybe just our staff, like Glenn and John, and helping us get through it. Maybe Ariel was there, but we just didn't have a lot of talking going on. We had a Brian McCormick video, which was good, of course. But yeah, the XBI was requested. And yeah, I do. I think XBI, you got to give XBI its due as well. I mean, this one, to me, right, if this can break out of here, there's a lot more potential. I think maybe it would be better to show that on the weekly chart, and it is. So you can see that, right? That this has been struggling for a very long time, and really you get probably your 100-week would be just a good way to say, look, if this thing can take out the 100-week, that's when it really opens up a lot more potential for itself. So that does look potentially interesting to me. If it can, it's not that overbought. It's only at 56 on the weekly RSI, so not that high. And if you look at this, and I know this chart seems a little busier with all the lines I've got on it, but yeah, I think, look, you got to say, if it can work its way through, let's just put a number on it. Let's say 88. So if it can work its way through 88, granted, there's a few wicks up there, but that really does open it up, I think, to try to trade up into the low to mid 90s and maybe attack these highs. That's really what you're looking at. So 88 in a market that stays strong really probably opens up the door. Granted, you're going to have some flat lines, but every SMA is now to the south. Most of the SMAs in the short term are rising. The long terms are kind of neutralizing each other out, and they're basically neutral as a package. So to me, this is starting to shape up, and you can see that it's nowhere near the upper Bollinger Band. These are set to 2 standard deviations off the 100 spine. And that to me means there's plenty of room here still. And they're not particularly, the Bollinger Bands are not particularly wide. They're wider than they have been at times, but they're not particularly wide. Like back in here, you can see it's, so you're not talking about some kind of a massive moonshot that would be something extraordinary here. And so you can see, once this thing can really get going, it can really get going, and you can go back and find that. So when they focus on this and things are there, it can go. So I think, yeah, you keep an eye on that. If the market stays buoyant, the market continues to find a way to rally, frustrate a lot of folks, I guess. Yeah, I think this could join the party above 88, and there could be a nice little burst for about, let's say, 5 points, give or take, if it can get through there in a strong market. So I think I'm going to end on that. Just going to say that I hope something to share with you helps you out this week or at some week in the future. And I'll remind everyone just to be really nimble because of where we are in terms of short-term overboughtness in so many ways. Be careful, especially early in the week. If things look bullish, you find yourself on the bull side, just be careful about how you manage things. A little bit extra careful, I guess, and then stay nimble for the week. And thank you for tuning in.